Well, good morning, everybody. Let's go ahead and get started. And we appreciate you being here today, those of you who are on live, and those of you who will be joining us eventually. We appreciate you being here. And I'm trying to get my screen acclimated so I can advance the slides here. There we go. We will be recording this, so I'm just also just saying thank you to those of you who will eventually be listening to this. My name's Carl Baker. I'm the managing member of Baker CFO Advisory. We are a fractional CFO firm, outsourced accounting firm. We're happy to announce, we haven't put a lot of marketing messaging out, but we're happy to announce that for our corporate clients, we're also going to be available to help them with tax planning, tax return, and annual tax services. So we're pretty excited about that, and more on that later. Again, my name's Carl Baker. I have been working with corporations in a variety of industries for 30 plus years. I've worked with startup enterprises all the way up to businesses with billion-dollar balance sheets. And we're in business to help corporations that are growing, that have converted from that sole proprietor status to a growing business that's starting to establish infrastructure, et cetera, that need the financial leadership on a part-time basis, that need some outsourced accounting, need tax accounting. We're in business to help those kinds of clients. And for that same reason, we decided to start doing a monthly webinar. We'll figure out if we need to do this more often or not, but we'll keep doing this as long as people keep showing up and watching our videos in one fashion or another. And we have deep experience in a variety of industries. Those include healthcare, those include not-for-profits, those include contractors, professional services firms, et cetera. So we really just look to help clients in that way. And again, we're looking for topics that will be germane to those businesses that are trying to figure things out, frankly, as they grow and add services and as their business becomes more complicated. So last month we talked about cash flow management, and this month we're talking about numbers business owners need to track to grow faster. My introductory comment about that is that I've worked with a lot of business owners that are sole proprietors, that are they're really just grinding it out every day, trying to get more customers, trying to make sure cash is in the bank, trying to get to the next customer. And at some point, as the business grows, to the extent the business owner wants that, infrastructure needs to be put in place, data needs to be put in place. So we wanted to talk about that from that perspective. So let's get going here. Excuse me. What are we going to cover today? We're going to cover key numbers every business owner should track and how to use the data. We'll spend the bulk of our time in that item number one, key numbers every business owner should track. We'll also then take that data, take that information and say, how do we use that data to manage our business? What are some tips and tricks, tools and resources for tracking business, tracking these metrics? One of the things, first of all, before I forget, I'm just going to interject here for anybody that's listening. If you want to let me know where you are in your business cycle, give a comment in the chat, or if you have questions, throw them in the chat, and I'll do my best to answer those and dive deeper in anything you want to talk about. But I did want to put that in there. We've also made note that besides our monthly webinar, we have white papers on our website, bakercfoadvisory.com. You can see a little bit more about me there and our experience, as well as some of the services we provide. So just wanted to make that comment. As I have worked with businesses, those businesses that use data, apply data, systemize the review and compilation of that data, the more businesses do that to run their business, the more effective they are. It's important for a growing business to convert from that grinding it out, using your gut to run your business, seeking uh, seeking that new client every day, and just making sure you have just enough cash in the bank, converting from that to a structured, disciplined business with the use of data will help you just grow and be that much more effective. I've used the phrase before, what gets measured gets managed, and this just goes right along with that. So let's dive into the metrics that we want to cover. We've talked about this. I've sort of just laid this groundwork. I knew this slide was coming up, but let's just talk about this. Data-driven decisions help businesses thrive while others struggle due to lack of insight. And I sort of talked about that, and I have definitely seen that. I'm working very recently with clients where we've realized that a lot of the decisions lately had been made on gut, and we're applying some data to evaluate decisions. Things like, do we sign on to a new vendor that's giving us a contract? What's the ROI on that? What is, should we move into a new area? What is a new service line? So that data-driven attitude will help. The other thing that's important to understand is that second bullet point, which I hadn't touched on. Having that data will give you insight that you think you might know, but putting that data in front of you will actually provide that insight. I've had clients recently where we gave them some financial statement information, and they said to me, we knew where we thought we were, but we had no idea we were spending this much money on this type of expense. This financial report that you gave us really helped us see the issues that we're having and where we're spending our money. And it gives us the insight that we need to be able to pivot, maybe make some decisions about whether we're spending our money in the right way. So just think that's important to evaluate. The data will draw out your opportunity to see to have the insight about the data, and then to pivot towards that. All right, so let's move into the four categories that we're going to run through from a data perspective. Obviously, I'm a financial person, so we're going to start with financial metrics, but lo and behold, we are going to navigate through, because I serve as a contracted CFO for people, and oftentimes we're talking about more than just financial metrics. So I think it is important for a growing business to understand the data in other areas, and they all have a financial component, but we've put them into four buckets: operational, obviously financial, the others are operational, sales and marketing, employee performance. Two other things that come to mind as I move into these. One, somebody's going to say, well, maybe that one shouldn't have been in operational, it should have been in financial. Okay, this is the way we've organized it. And two, somebody else might say, well, there are other metrics that I think are more important. And that's a great point as well. This isn't necessarily intended to be all things, every metric that's available. We've pointed out a few. We've pointed out probably 10 to 14 metrics that we think are important. The other thing to point out, to understand, is maybe this will be too many metrics for you. And maybe you will take away from this that you really only need 2 or 3. And I think that's important to understand, especially for a growing business owner. Maybe you're a sole proprietor, maybe you're not, but maybe you're a sole proprietor and you have a lot of things going on. You still need to make sure that you have cash in the bank. You're getting to that next customer, the next client. So what are the key drivers? What are the 2 or 3 things, maybe one thing that you can glean from this, that you'll pay attention to from this list, that will make a material difference in your business and give you the insights? My point is to start to look at the data from a data perspective. Look at your business from a data perspective, and that will be that'll be a good first step for you. All right. So, in the financial metrics, what are the three metrics that we're going to talk about? Actually, I've added a fourth because I want you to be thinking long term. So I did add a fourth, but let's just navigate through these: revenue and profit margins, cash flow, break even point, and a bonus at the end. So. It may seem obvious, and we start with the fun stuff first. We're in business to give back to the community, to help you spend your time doing something you're interested in, but also you're in business to earn a living, to give jobs to people in the community, to add value to the community. Well, obviously, you need revenue and you need a return on your business. And the earlier you start to pay attention to that, not just from a cash in the bank perspective, but from a financial metric perspective, from a trend line perspective, the earlier you think about it in that perspective, the better you will be in understanding where you've been, where you are, where you're going. So this metrics, and some of that may seem obvious, but again, putting it into some structure. Obviously, revenue is your top line, profit margin is your revenue minus your direct expenses. And understanding those trend lines will be important so that you can understand, as I already said, where you've been and where you're going. I think it will help you understand. It will draw out whether you are managing your expenses properly, whether you are using your people properly. So those are just some of the things that will give you a good sense. We talked last month about cash flow. Obviously, cash flow is important, and we just put it down here. And this is a truth. Many businesses fail not because they're unprofitable, but because they run out of cash. Time and time again, uh, business owners do not go into this with the proper amount of working capital. They overspend in marketing, for example, and then they run out of cash. We talked last time about the fact that many businesses think they're having cash flow issues when they're really having profitability issues. So we just wanted to throw that out there. Forecasting cash needs are important. Monitoring those inflows and outflows. You're probably already doing that, but it's important to understand that. We talked last time as well about the managing cash flow from a receivable and managing payables perspective. So I think that's important to understand. The break even point. That's understanding where your break even point from a macro and micro basis, I think is very important. From a macro basis, you've probably spent money in advance. You've invested in marketing. Maybe if you're a retailer or some type of business where you have an inventory, you have put money out in order to build up some inventory. So understanding how many clients you need, how many customers you need, how much you need in the value of sales on a macro basis in order to start to recoup those dollars. That's important to understand and to actually think about that and to focus on that. On a micro basis, on an individual by project basis, understand what your break even point is. So what does that mean? It depends on what kind of business you are. But if you are a professional service firm, what are your costs? What are your salaries? What's your overhead, insurance costs, software costs? What are your individual costs? And make sure that you're baking all of that into your pricing on a project basis. If you're a contractor, making sure that you're capturing all of those costs to properly price your projects. And obviously, you have to take into consideration the market value and competitiveness with other competitors. But at least having that baseline understanding will help you with your pricing. If you're a restaurant, capturing all of and I think a lot of people understand this as consumers, a plate that's put in front of you, somebody has spent the time to evaluate how much did the protein cost on a per pound basis. What is the labor cost? What's the overhead cost? So on a very micro basis, needing to understand that so that you know how that lines up with your pricing. What are some other points here? I think I've generally covered all of those things. All right. The bonus item that I put on this slide is additional focus on balance sheet. Again, as I said earlier, as you are if you're an early stage business, this might be a new way of thinking for you. If you're an experienced business owner, you already know this. But as a business starts to grow, starts to add new service lines, starts to add new locations, start to add new people, maybe you're moving into a new location, etc. The more you're doing that, inevitably, you're going to need to build up working capital in order to fund your business. And that might include taking on new investors. It might mean taking on new partners. It might mean going to a third party lender, such as a bank, and seeking financing in that way. When that starts to happen, you're moving into the realm of people looking not just at your income statement, not looking at your revenues and your expenses, but also looking at the financial strength of your overall business, your balance sheet. What do you own? What do you owe? How much do customers owe you? How quickly are you collecting that cash? Are you paying your vendors? Are you taking all the money you're earning and putting it in your personal pocket? You're not going to be able to do that. You're going to need to build up working capital and cash reserves. So I say in this bullet point that you're moving from thinking about the business's financial position to financing positioning. So I think that's important to understand as you are navigating through that process. People will start to look at not just how much are you earning and how much are you spending, but how much are you keeping in the business and how effective are you at running the business. And there are metrics involved in that. So just wanted to talk about that, and I hope that makes sense. And that positioning is oftentimes the difference between go and no go when it comes to a lender. So I think it is very important to understand that. All right, let's move into operational metrics, our second category. We're going to talk about customers and the various components of customer acquisition. And we also tacked on a comment about inventory. So let's move into this. Customer acquisition cost is a very common metric that's important to understand as you are building up your business. And we say in here, why does this matter? If it costs more to acquire a customer than the revenue you're bringing in, you're operating at a loss. Now, that may sound obvious, but being aware of that and having that be a top of mind consideration excuse me, is important. I have a client that is very focused on this. They're early stage. They've run many businesses, but they are currently running a new business. They run a business, sell it, make some money, start a new business. And this is a very top of mind component for his evaluation of how the business is going. He wants to know, what is our revenue and how much does it cost us to get that revenue? So I think that's important to understand. How to use this, comparing this customer acquisition cost to customer lifetime value to determine your overall profitability. And we'll talk about customer lifetime value in a moment. It also is a litmus test for how your marketing is going and how your ad spend is going. Excuse me, I have a frog in my throat. Can't help it. Excuse me, I hate it when that happens. I'll move to mute my phone or my mic next time. I apologize. Can't be helped. I apologize. The next item is customer lifetime value. Why does this matter? Customer lifetime value, it depends on the nature of your clientele. Do you do a lot of work with one-time customers? Do you do a lot of work with recurring businesses? If you're a professional services firm that might have recurring business, understanding that customer lifetime value from each of those different perspectives will give you the insight you need to know as you're managing client relationships. You might You might give a little more favorable pricing to somebody that has been with you for a long time versus somebody that is wanting a one-time service from you. And that's a micro example, but being aware of and thinking about it from a lifetime value and a relationship perspective will give you that insight. Um, Obviously, and we'll talk about it in other components as well, but focus on retaining high value customers will give the business more value, will help you with your cash flow management. I also want to point out the second bullet point, customer experience. So many times as businesses are growing, they're a business owner is focusing on getting to the next customer, the next customer, the next customer, making sure that we're paying attention to the customer lifetime value and giving each customer a good experience will help them. Your customer acquisition cost will be way more for a new customer than it will be for a repeat customer. So taking advantage of repeat customers will help infuse value into your business. So I think that's important. Um, we say in that third bullet point, use targeted marketing to increase the average order value. Again, the more rapport you have with your customers, the more trust you have built with your customers. I've talked about that as recently as this morning in terms of some new business. The more trust you have, the more you can continue adding value. We always want to add value to clients. It's not just about us receiving money, but as you're adding that value, you can increase your sales as well, and that will increase the value of the business. All right. There we go. The third item in the operational metrics is inventory turnover. And I just think I want to touch on this briefly. If you happen to be in a business that has inventory, those businesses such as retailers, the big box stores, small box stores, contractors that have supplies, uh, a retail coffee shop, those businesses that have inventory in which you're buying product for the purpose of future sales, managing that inventory is very important to the key and is a key to the success of the business. Those businesses that are being run effectively are doing so because they're experts in inventory. So, uh, managing that inventory is important. Inventory turnover, what does that mean? How many times does inventory turn over throughout the year? So, you might have some products on the shelves, for example, that turn over on a daily basis. You might have some products on the shelves that turn over twice a year. You sell those products twice a year. But for whatever reason, you've decided it's important to have that inventory. That means you have to buy that inventory 6 months in advance, and managing that working capital to afford to have that sitting on the shelf with no return for 6 months. That's the key to success in understanding that, and putting your understanding how often each of your products are turning over will help you manage your working capital more effectively. We say in here, optimizing inventory levels to reduce storage costs, putting just the right amount of inventory in place. That also will affect your cash flow, and will also predict demand and your stock accordingly. So I just think it's important to understand the components of inventory management as you're managing your business. Let's move into sales and marketing metrics. Conversion rates, churn rate, and return on ad spend. Conversion rates, what does this mean? How many times we're overall talking about the sales funnel, and I think that's important to understand. How often are you converting leads to sales. And when we talk about a sales funnel, this is not a sales funnel training per se, but this is really what this is referring to. If you're budgeting and trying to anticipate your sales, or if you want to understand how much sales you need for a break-even analysis, for example, or for some other reason, understanding how many leads do you need in order to make a sale? Then how many calls do you need to get those leads? How many other types of outreaches do you need in order to make the calls, et cetera? So that the different layers of outreach can be predicted in a sales funnel approach in order to know what your sales are going to be. Um, Understanding that data will give you insights into weak points in your funnel, will help you with different calls to action in various places within that funnel, and will just provide that insight so that you can react to it in an effective way. Churn rate. Churn rate is the backdoor effect of sales. So if you are bringing in sales and you're aware of your conversion rates, customers coming in the front door, you also want to be aware of your churn rate. Do you have customer retention issues? Inevitably, any business is going to lose some business along the way. Not necessarily because of anything you've done, but things change, priorities change, customer budgets change, whatever. Businesses go out of business, whatever. Because of those, understanding that churn rate will help you evaluate if there are any issues that you can control. We want to be aware of issues that we can control. So identify reasons why customers are leaving, implement retention strategies, loyalty programs, customer support improvements if we believe that churn rate is a little excessive, and then just focusing on that feedback and improved satisfaction to reduce churn, going back to that customer experience comment I made earlier. ROAS, return on ad spend, is a very common metric that is known in the space. Those who use it most effectively will manage their marketing budget most effectively, and those who don't will be in that bucket that I talked about earlier, in which they will run out of cash. So if your ad spend does not generate the positive ROI that you want, then you're wasting money. And what is that ROI for an ad spend? Well, that's going to be up to you. Are there industry benchmarks? Certainly, but just think about, if I spend $1 in advertising, how much do I want? What is worth it to me? Is it $3? Is it $10? Is it $100? What is my ROI that I need in order to feel good about that advertising? And applying that metric and evaluating it from that perspective will put you in the bucket of being a data-driven organization. So it's in order to do that, you have to then start understanding the data and evaluating it. How do we do that? Tracking ad performance across different channels. What are the returns we're getting from those ads? Reallocating budgets to the higher performing tests. Certainly doing A/B testing and those sort of things. Will just using this data to understand what's working, what's not working. Are we getting the return? And it's important to understand, it's important to be aware of the fact that if you don't think something is working right, you have to have the corporate will to make a change. And to do that at the right time will help your business be the most effective it can be. All right, finally, let's talk about employee metrics. As you are growing, it's obviously HR matters. We want our employees to be happy. We want our employees to have a good experience. We want our employees to be paid well in the right amount. We also want our employees to treat our customers well, and we want our employees to get the work done. So a few of the things that I throw in here to manage all of that is employee productivity and retention rate. Employee productivity is important to understand. I've talked for years with clients about productivity with their employees. There's a difference between managing the productivity of an employee being paid on a salary versus managing an employee being paid on an hourly basis versus an employee being paid on a per unit basis. So if they're paid, managing all of those is a different exercise. On a salary basis, as an employer, you're wanting to make sure that they are doing their job, they're being active, they're helping their customers, or providing the internal service in whatever fashion they're hired to do, but being productive and fulfilling their job description. A person that is employed on a per unit basis, they're certainly going to have incentives to function at the highest level, and sometimes that might mean, I think of the case of healthcare enterprises, there could be accusations of over productivity in healthcare. You have to make sure that the services being provided are medically necessary from a visiting nurse perspective. So managing productivity to make sure they're not too productive, they're not doing services. Their incentive is to provide service and be paid. So just making sure those services are necessary in that example. But you can see with those couple examples the need to manage that productivity in a different way. What are the things that you will glean from this exercise? Identifying bottlenecks and streamlining processes. If a person is continually saying they are being held up because of some process, or somebody else is not doing their job, if you're focused on productivity and evaluating your staff from that perspective, it will give you insight into what's happening. It's easy to say, well, we think the employee is being lazy, but very likely it could be a bottleneck issue or a process issue, and just being aware of that. Other things, training, and we've touched on improving efficiency. We think it's important to set clear metrics for accountability as well. Just being overly communicative will be the most effective way. Employee retention rate. Again, we want our employees to be happy. The longer they're there. I do have a contrarian view on this, but overarching comment: the longer they're there, the better the culture will be, the better continuity will be. There's some established institutional knowledge, and there is a high amount of value for all of those things. And those things will infuse a better workplace culture, employee satisfaction. Most likely that means that customers and clients will be happier. The continuity of the machine will be better. I also think that my contrarian view is eventually there tends to be a negative ROI on that. There can be times when somebody that has been in the business a long time starts to be a little more toxic. Maybe they are burned out. Maybe they are, there's a word I'm losing, but they are a little bit diminished in their attitude. And certainly that could be a savable situation. I've had lots of those cases, but there is a time when a second set of eyes, a new set of eyes, can infuse value into the business that's qualitative. So I just talk about that a little bit. All right. That is the sum total of all the metrics that we have. And again, I'll just say, if anybody is watching this, they have questions, please pop them into the chat group. Also, at the end, you'll see my contact information. If you don't want to do it through the chat, you want to email me, text me, find us on our website. Don't hesitate to reach out there. While I'll also say, hope I'll remember later, if anybody wants these slides, happy to send them to you as well. All right, so how do I use this data to manage the business? We're talking about moving from a gut check business to a data-driven business. So there are 4 steps here. Set clear goals and benchmarks, define measurable objectives. for whatever that means for you. Are you focused on revenue? Are you focused on improving profitability, cost reduction? Whatever your focus is at the moment or in the upcoming period, define those measured goals and metrics, and then work towards those, and then use this data to evaluate that. Regularly review and analyze that data. And the EOS system, which I'm a proponent of, or something like that. I'm also a proponent of the Great Game of Business system. Um, puts this into the culture, and the more that you infuse these reviews and this analysis into the business, the more it becomes a part of the way we do business. And I think that's what I'm trying to get to with these comments, and instill into these comments. So schedule weekly meetings in whatever rhythm you need to do, using visuals, etc. Make data-driven decisions. Again, I think of an example lately where we're talking about, with a client, we're evaluating whether to take on a new contract or not, and we are overtly steering clear from concluding on what do we think. Do we think this is a good idea? We're actually looking at the data and evaluating the data to see if we think that we'll get the ROI that we need in order to make that decision make sense. Avoid analysis paralysis. I think it's also important to understand that all of this data and being put together is giving you the opportunity to evaluate and to respond. But you have, as the employer, as the business owner, you have to have the corporate will and the energy to use the data and to pivot based on the data and respond, not necessarily pivot, but to respond to the data and to actually use the data and make the decisions. Some of the decisions may be easy, some of them may be more difficult, but having that corporate will to use the data to run the business, I think, is paramount. Also, not being in analysis paralysis where you're just always analyzing but never responding. So put the data together, focus on the key metrics that are needed for your business, prioritize, and then eventually respond. What are some of the tools and tips and tricks? Well, it depends on how technical and how automated you want to be. I would say you can have a few things that are done on a manual basis. The more manual you're tracking and compiling this data, I would say the fewer things you should probably be landing on in order to focus on. The more automated, the more you can put dashboards together and identify things. But a few things that come to mind here. There are certainly marketing metrics that can come out of your CRM. There are financial metrics that can come out of your accounting system. I say QuickBooks here, but whether it's your accounting system, maybe you have a practice management system, and those systems usually have dashboards available that will give you the data. In terms of marketing, Google Analytics is a website that a lot of people use, and there is a lot of data available in Google Analytics. Again, the do-it-yourself tracking component, simple spreadsheets. The more manual, the less you will probably want to do, but certainly you can get a lot of data from spreadsheets. And I don't want, I've heard others say it, and I find myself agreeing wholeheartedly. Don't get away from the manual use, the use of manual tracking, because sometimes compiling data will actually help you think about and focus on the data as well. So I just throw that out there. Use templates for various things that you're tracking, whether it is key performance indicators, expense tracking, budgets, etc. At a certain point, a sole proprietor needs to start leveraging their hats. So we throw in outsourcing. We're, of course, accounting and finance related, but there are so many other options out there. There are outsourced HR folks. There are outsourced marketing firms. We throw this out there just to say, at some point, you as a growing business want to surround yourself with people that can help you manage and effectively run your business. So outsourcing is a way as a stepping stone to go from you doing it all to having a 300-person office of executives and managers. In between there, outsourcing is an effective way to cover operations, financial, marketing, HR, etc. Common questions that we get asked: how do we prioritize which metrics to track? Well, we've sort of infused the answer to that throughout today. It depends on your business, what's important to you, what are your overall objectives, what are your priorities, where do you think your problems are? Focus on those things. Ways, what's the best way to visualize data for my team? Again, I've looked at I talked about the dashboards, etc. I think it's important to make the complicated as simple as possible. We've had situations where the temptation is just to take a financial statement and throw it out to a bunch of managers or a bunch of team members and say, here, look at this and tell me why you're over budget. And that's not going to work, because I personally, as an accountant and a financial leader, I understand what a income statement is, but not everybody does. So there needs to be a discussion, a training, maybe reducing that to a simpler format, but just throwing stuff out and hoping that that you'll get the feedback you need to run the business, that won't be effective. How do I improve my cash flow? There's a lot to talk about there, but I'll just say at some point sometimes you have to just ask your customers. That's what comes to mind. Asking your customers for money when you need it, managing your receivables, payables, establishing your pricing correctly, putting a structure in place there. I hope that you, as a listener of this, have some key takeaways. We're trying to help you as a business owner, growing, getting out of the chaos, adding some discipline. We're hoping that some of these conversations will help you convert from working in the business to working on the business. Your job eventually changes from being a day-to-day client server to being the owner and runner of a business. So what does that entail? That does entail accumulating the data, tracking trends, and using that data to make informed decisions. That data will then also, you will pull insights out of that data to spot opportunities and mitigate various risks and mitigate issues that you maybe knew in your gut, but the data really puts a spotlight on those things. And I promise you that will happen. I gave a few examples earlier where that happens. What comes to mind, a client said, I thought we were spending X amount on so-and-so type of expense, but wow, we're spending a lot on that. And that really helps me understand that. So that's just an example. And then from there, pivot, make some changes. I'll just say, I'll end that with that story and say thank you. If you have any questions, please don't hesitate to ask, whether it's by reaching out to me at our phone number. I would say the best thing to do would be to go to our website, bakercfoadvisory.com. Email is on there. Phone number is on there. There are white papers for a number of topics, a number of industries on there. We're experienced in all of the industries that we are messaging to. So we would love for you to take any of those white papers and use those to help your business. I'll also end with a comment. Please add on your calendar, Thursday, March 20th, we're going to continue our discussion talking about growing businesses and what are the things that you need to be doing to prepare for that growth, navigate through that growth. We have helped many businesses get from point A to Z and pull them along, and we'll use that experience to talk about that next month. Things that will come up will be staying organized, getting organized, infrastructure, expanding, eventually how to get funding, etc. So we look forward to talking with you about that, and we will see you next time. Thank you very much. Bye-bye.